Good morning, good afternoon, good day. Welcome to my midweek market meetup, 1st September 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. This is my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Before I begin, I wanted to mention what I already tweeted, that I have released the latest versions of all the Q systems. You may download them. If you are using Q systems, you may download them from your personalized download page. The installation steps are also on our website, on my website sagarnandi.com, under install and setup category. If you have any questions regarding the latest release, you may contact me using my email ID. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems add-ons that I use for my trading. They are add-ons to the TradeStation and Metastock platforms. That was the last slide of the presentation. Let's continue with the live system. Starting with a look at the global markets, starting with Australian index AXJO. Australian index, okay, today I am not using, okay, why don't I change to AXJO, .AXJO. AXJO, the backdrop color turned to magenta, bearish color 2 weeks ago, and that is continuing. As I mentioned in the previous webinar, that was the weekend webinar, that though the backdrop color changed to bearish, and in fact we had a bearish flow in daily, we wouldn't try to short the Australian market because it had trendline support nearby, and those supports are still there. Therefore, I'm not going to try to short the Australian market. Today's candle tried to go below the trendline support, but once again the memory trend lines provided excellent support. Price recovered above the trend line. It is continuing to be in an uptrend. It has many trend line supports and no trend line resistance. There is no buy setup because the backdrop color is bearish, but it is in an uptrend. Next, Japan's Topix index. Topix index was inside a range for a long time, and today it broke out of the sideways range. In the daily, it broke above the trend line resistance and also this immediate watermark resistance. The candle shape is bullish. Today and yesterday we have above average volume. In the weekly, it broke above the trend line resistance. Backdrop color is bullish and shape is also bullish. This is looking quite bullish. You could look for breakout kind of setup in individual fundamentally strong stocks. You could look for other setups also, so long as they are in strong fundamental stocks in strong industries. I think today could be a day to look for buying opportunities in the Japanese market. When did we have previous such opportunity? That would be near the lower edge of the sideways market on this day when it displayed the bull release signal and it also had bullish pressure. So that would be the day to look for buy setups, and today also you could start to look for buy setups. It was moving sideways, now it broke out. Next, China's CSI 300 index. This is still remaining inside the range formed by trendline resistance and support. Multiple resistances, multiple supports. Today's candle shape is also indecisive. We'll avoid taking any directional trade in China market right now. UK's FTSE index, that is also continuing to move sideways, as was true in the previous webinar. And lastly, India's Nifty 50, which was the strongest of the global markets, that is continuing this week. So far, as of yesterday, it made a new all-time high. Today price closed little bit lower. However, today's volume is much lower than previous day's bullish volume. Previous day we had very high volume shown by the dot on the activity bar, and today we have below average volume. Bearish day but below average volume. It is quite bullish, however it is also above the upper boundary, quite a bit above the upper boundary, and that is not a place we like to initiate new buy trades. Where could we take our previous buy trades? That would be when price broke out of the watermark resistance on this day. If you saw the topics chart just now, topics chart today is what Nifty 50 was on this day. It broke out. So for topics we could buy at lower edge of the range. For Nifty 50 that would be on this day or the following day when it came to the lower edge of the range and reversed. Topics also gave such a lower edge buy setup, buying opportunity, and if we wanted to buy breakouts, then we could look for breakout setups on this day. Topics is giving similar breakout setup today. Today Nifty 50 is bullish, pretty bullish you may say, but also overbought for many days, shown by the stretch band indicator in both daily and weekly charts. Looking at that, I will avoid buying new stocks. That is looking at the overall market. However, when you drill down into individual industries, you might find industries that are rotating in favor and look for buy setups. That is the same technique, 360 degrees approach, that we apply to all markets, including the USA market. That was a look at the global markets. If we compare the global markets today with what we saw during the weekend, we see overall it strengthened a bit. UK and China markets are continuing to be sideways. Australia and India markets are continuing to be in an uptrend. The changes in the Japanese market, which was sideways and now it broke out, therefore it is in an uptrend now. So there is slight improvement in the global markets overall. Let's now look at the USA market. For that I will use Q Elite on TradeStation. Let's start with S&P 500 ETF SPY. very similar to the Indian market, or you may say India market is very similar to the USA market. One day earlier, S&P 500 made a new all-time high, and yesterday it pulled back little bit. Just like the India market made a new all-time high one day earlier, and today it pulled back little bit. Weekly, daily, both very bullish, close to the upper boundary, so you would not like to initiate new long trade now, but it's certainly bullish. When it is making new all-time high, there is no other way to put it. Nasdaq ETF QQQ, even more bullish than SPY, made a new all-time high one day earlier. Yesterday pulled back little bit, very little bit. However, the traffic light candle color remained bullish. Weekly is very bullish. Relative performance is showing that it is outperforming the broad market. And though it came down by a very small percentage yesterday, if you looked at the futures as of now, futures have gained today more than what QQQ lost yesterday. In fact, that is true for all the futures. The loss of the futures yesterday is already made up by today's gain in the overnight market. We'll see what happens in the regular market, but QQQ is continuing to be very bullish. DIA, that is not so bullish. The relative performance is showing it is severely underperforming the market. Here, the backdrop color is actually bearish. And in daily, it is not moving anywhere for 1, 2, 3, 4, 5, 6, 7 days. And it has many indecision candles in terms of shape. Out of these last 7 days, 1, 2, 3, 4. Yesterday was also a doji candle. So out of last 7 days, 4 indecision shape candles, and price is not moving anywhere. Weekly backdrop is bearish. That is showing much relative weakness compared to SPY QQQ. However, in absolute terms, it is not weak at all. Very close to the previous all-time high in solid uptrend. Just relatively speaking, we may say it is weaker, but it is still very bullish. And IWM is moving sideways for a long time. Since this bearish headwind in the weekly chart, price practically didn't go up. And if you look at these long lower tail candles, you see every time it tries to go down, it finds buyers. Looking at that price range around 210, you could switch to daily chart and look for buy setup every time price came there, which would mean you could start to buy at this point and at this point using the bull release signal, that is the box or double bottom sideways market buy setup. You would notice that those bull release signals also came when price tried to go below this watermark support and reversed, creating a false downside breakout. So those would be the points to apply the box setup and buy in IWM. Now it is inside the range, in the middle of the sideways range. This is a no trading area. We would have bought near the lower edge of the sideways range. IWM is relatively weak, but it is not bearish, it's moving sideways. Overall, we have to say the market is quite bullish, and though IWM was weak and is weak overall, for last couple of days it is outperforming the market. We can see that by this relative performance in the daily chart tilting up from this bottom. Overall, USA market is very bullish. interestingly very similar to the India market, and this I have mentioned earlier. Not that India market influences USA market. I think totally the opposite. A lot of bigger investors invest in the Indian market, and I think the money flow affects both the markets in a similar manner to a large extent, at least as far as the major Nifty 50 index is concerned. Of course, I don't look at Nifty 50 and trade in the USA market, but the correlation is very high. I would say India market has the best correlation to the USA market when you compare with the other global markets. In any case, the market ETFs futures don't show any weakness or bearishness, and that may be true when we look at the market internals. Let's look at market breadth total view. By the way, this latest market breadth total view is also included in the release, and I have created a post explaining the steps to install Q Global Market Breadth. If you go to the install category in my website sagarnandy.com and then further go into Q Global install, I have included this post now, how to install Q Global Market Breadth. The latest one includes these categories of stocks that are in favor. I think that is the change in the Q Global Market Breadth. Let's look at Q Global Market Breadth. This is the total view that is comprised of the two composites and four major indices, all shown in a single chart. If we look at the percentage of stocks above 50-day moving average, in the previous webinar itself I showed that the yellow line, percentage of stocks above 50 was already in an uptrend, and that is continuing. So the long-term weakness or bearish divergence that we were seeing in the yellow line, that was nullified couple of days ago, and the uptrend is continuing with higher high, higher low. If we look at the distribution accumulation counts, the previous count was accumulation count of 1. If we look for other bullish bearish signals, we had one Eureka before that, then a distribution count of 1, distribution count of 1, then accumulation count of 1, accumulation count of 2. So for a long time, we have not seen much of a distribution count. When the market is at or near all-time high, like it is now, I'm looking for large distribution counts, 2 or more. And I'm also looking for Hindenburg. By the way, Hindenburg, which is not appearing recently, is also included in the latest version. And I also wanted to add that the calculation is same or similar to other platforms like HGSI, but for some reason, most likely because of the data source differences, the Hindenburgs for NYSE and certainly for NASDAQ will not be plotted exactly on the same day on these two platforms. Or if you are looking at Hindenburgs on other platforms, other charting platforms, you will find differences due to data source differences, and that will be valid for Q Global Market Breadth also. Hindenburg is already included in the latest release, but it is not appearing because the calculation is not firing Hindenburg, and because of the absence of large distribution count, because of the absence of Hindenburg, I am continuing with my view that I am continuing for a long time in webinar after webinar, that I am not expecting the market to drop sharply suddenly, because it has never happened before. That means that makes the possibility, or rather said, is the probability of dropping sharply suddenly lower. Not that it is not impossible, it is possible, but it is less likely because it has not happened before. If we look at what category of stocks are in favor, let's look at growth versus value. Earlier, growth was outperforming. When the magenta line tilts up, growth is outperforming, which was true in this area early June to third week of July. After that, it underperformed, and if you see at the right edge, I drew this line manually, it is creating higher high, higher low again. Therefore, for couple of days from the middle of August, growth is starting to outperform again. You may find that in growth related ETFs, FFTY or ARKK, we look at that. But this is more broad, growth versus value. Growth is currently again outperforming value. And small cap versus large cap, the cyan line, if it tilts down, it is underperforming. The underperformance started from around second week or first week of June, you may say first week of June, until middle of August. And after that, for last couple of days, weeks, about 2 weeks, small cap is starting to outperform. So at the right age, what is in favor? Small cap and growth. That helps us to decide what kind of stocks we may favor to buy. Not that we cannot buy other stocks if the 360 degrees analysis allows us to have a buy setup. For example, if a large cap growth stock gives us a buy setup, we may take it, but we may at least a little bit favor small cap growth stocks looking at this overall picture. By doing that, we'll align one more force, the category of stocks in favor, we'll align that force also with our trades. The market breadth total view is not showing any weakness. Certainly, it is not showing any likelihood of market dropping sharply suddenly. If we look at Nasdaq versus NYSE, market breadth for Nasdaq as a whole, NYSE as a whole, the percentage of stocks above 50 MA for Nasdaq, it is now at 45%, NYSE 55%. So NYSE is continuing to remain stronger than Nasdaq, though for both of them, the yellow line, percentage of stocks above 50 MA, has created higher high, higher low. This I showed in the previous webinar also. Therefore, the bearish divergence that we observed earlier has been nullified. And the bearish divergence in advanced decline up down volume was already nullified several webinars ago. I mentioned that. So there is no bearish divergence at present from any angles, neither from percentage of stocks above 50 MA, nor from advanced decline, nor from up down volume. So from this detailed view also, there is no weakness visible in the market. Now let's look at the sector industry stock breadth from QH. Let's first look at the very useful 1 month to 1 day sector industry stock advanced decline breadth. In the previous webinar, the 1 day and 2 day periods were more green, and we are seeing the 1 day 2 day periods are flip-flopping between red and green. So it was only expected, and I mentioned that. You all know that if you are attending the webinars regularly, or if you are using the Q Edge regularly, you know the 1 day, 2 day periods are flip-flopping for a long time between green and red. Last time it was predominantly green, so we would expect them to turn red. It has turned little bit red, not a lot, but it has turned a little bit red. 2 day period is now more bearish than bullish. 1 day more bearish than we saw in the weekend webinar, but overall it is still bullish more than bearish. 5 day, 10 day, 1 month all were bullish and they are remaining bullish. We'll see if the flip-flop continues. That will mean 1 day, 2 day period will turn red. That may or may not happen immediately. In any case, overall we have to say that this Q edge, sector industry stock advanced decline breadth, is also bullish. And if we look at the bucket analysis, yesterday was almost unchanged in terms of percentage of stocks above the midpoint of the Bollinger Bands. Just 1% up move. So stocks practically didn't move much across the buckets, and you can also see that in the histogram, and specifically the two lines drawn on the histograms. The solid line is yesterday's area and the dotted line is previous day's area, so Monday's area, and you can see they are very close to each other. So not only that the overall percentage didn't change, the stocks themselves didn't move much across the buckets. How did the sectors do? Let's look at this. Let's look at the sector performance. Yesterday 7 sectors were up, 4 were down. Let's see which sectors were down. Consumer discretionary, industrial, information technology, materials. Interestingly, all the 4 sectors that were down yesterday, they were non-defensive. And I shared a possible bearish trade. We may look at the analysis today if I don't forget. I think that was in consumer discretionary. You could identify that in real time using bottom up as I did, or you could do that probably using top down also, because now you can see consumer discretionary was down yesterday. So yesterday was not a bullish day for non-defensive sectors. Over 2 day periods, 5 sectors up, 6 sectors are down. Which ones are down? Consumer discretionary again, energy, financials, industrials, infotech, materials. None of them are defensive. See, so far we looked at global markets, we looked at USA market ETFs, USA market internals, total breadth. We looked at sector industry stock advanced decline. We didn't find any weakness anywhere. But QH provides us with many insights, some visual, some tabular, using heat map, and this graph is showing that now there seems to be some weakness. Both over 1 day and 2 day periods, the sectors that went down, we wouldn't expect them to go down in a strongly bullish market. They are all non-defensive sectors. We'll see if this is a temporary phenomenon over 1 and 2 day periods or if it propagates further. Was it true if we took a step back and looked at longer term, not just 1 and 2 day periods? Let's find that out. Over 5 day, only one sector is down, that is energy. No, sorry, not energy. That is in fact consumer discretionary. Over 10 day, 2 sectors are down, green. that is consumer staples, utility. So now over 10 days we have the weak sectors as defensive sectors, consumer staples and utilities, and over 1 month only one sector is down. Okay, that is energy. If you are observing energy, it is overall bullish over longer term, but it is as a sector moving up down up down. Let's ignore energy for now. Now if we look at the 1 day period, 2 day period, 5 day, 10 day, 1 month period, we see that up to 5 days, 1 day period, 2 day period, 5 day period, there is some weakness in non-defensive sectors. That weakness is very obvious in 1 day and 2 day periods, but beyond 1 and 2 day periods the non-defensives were quite bullish. So the weakness is only visible on Monday and Tuesday. 1 and 2 day periods means Monday and Tuesday. Today is Wednesday pre-market hours. We'll see if that Monday Tuesday's weakness becomes more weak in coming days or it reverts back to strength. I don't see major weakness in many areas, so it's difficult to tell. Now I also looked at individual stocks and there seems to be a lot of fundamentally strong stocks that came down somewhat and now they are giving nice buy setups. So that is also bullish for the market. It's not that market is likely to drop suddenly. Those stocks are giving nice buy setups. In fact, we may look at some of them. Now let's look at the market from another side. Let's look at the mega cap top 20, the custom index in Q global market breadth, how it is doing. It came to the yellow line and there was a trend line support near that area. When it came here, I mentioned because of the trend line support and because it was already down from the recent peak, we're not going to short from that time. The yellow line and the trend line supports held for last couple of weeks. Mega caps are outperforming. Mega caps overall went up. This is mega cap top 20. Not only tech stocks, there are a few non-tech stocks also, but heavily influenced by the mega cap tech stocks, of course. Yesterday, we had very high volume in the mega cap top 20. So overall, mega caps did very well yesterday. We may look at individual mega cap stocks afterwards, but mega caps are overall doing well. And now if I look at the technical breadth using Q Finder, the weekly picture first, balance between bulls and bears using technical signals, all signals very balanced. Strength signals bullish, reversals bearish, and the reversal signals in magnitude are comparable to the gap ups. So when we combine the strength and the reversal, strength bullish, reversal bearish, together they become bearish. Trend continuation signals, they are also balanced. Overall, we have to say based on objective data, the weekly picture is balanced. Is there large number of bearish headwinds in the weekly interval? Not really. It has to be 1% or 2% to be treated as an alert. It is far below that, so we don't have any alert from the number of bearish headwinds in the weekly interval. Mixed picture, and yesterday's picture is also very balanced. All the categories are balanced between bulls and bears. And in fact, if you look at individual trade setups like go with flow, trend following trade setups, bulls and bears are almost equally matched. Pullbacks are also equally matched. Bullish versus bearish pressures absolute match 64 versus 64. Trend line touch, bullish versus bearish, nice match. Reversals also very close match. Interestingly, this very neutral picture of yesterday from technical breadth is exactly what we also saw from the bucket analysis earlier. Not only in terms of percentage of stocks above mid Bollinger Band, but also in terms of how the stocks were distributed at the close of Monday and how they ended at the close of Tuesday. As if nothing much happened between those 2 days. That is what we saw from bucket analysis, and we also see that from QFinder. That may be an indication of pause in the market. Though SPY QQQ are very strong, there seems to be some pause in the market when you look at it through Finder, through bucket analysis, and also look at the sectors that did poorly on Monday, Tuesday. Those were non-defensive. So let's see if that pause continues to further weakness or not. Now let's look at some of the stocks that I shared recently. LMAT. LMAT was a stock that I shared, I think in the forum. Either I shared in the forum, Twitter, or on YouTube webinars. I identified LMAT, medical equipment stock, LMAT, as a bullish idea because it broke out of the trend line resistance in weekly, had trend line support in weekly, and also had trend line support in daily. I think it broke out of trend line resistance in daily as well. After the breakout, it is holding on to the price gain. Stop would be below the trend line support, so stop is not hit. We could try to book profit. If we took the trade, we could try to book profit at the upper boundary, or if the risk distance is covered. If somebody took the trade, we are still in the trade. Another stock I shared yesterday in the forum was HA. Let's look at the post. It's good to look at the post because I post the analysis using live data. And this one, I shared around noon Eastern Standard Time yesterday. See how the Q systems helped me to analyze it in real time. Airlines was very weak over 1 day, 2 day periods, and in real time it became one of the strongest industries. If you look back, it was one of the very weak industries. I just look at the color. Some people look at the numbers, but I am visual trader, so I just look at the color. You could look at the number also. It was very weak, strengthened little bit, dropped sharply, and in real time yesterday midday I found out it was one of the strongest, and in terms of acceleration it was the second most accelerating industry. It had acceleration over 5 day period also, and in real time I saw several signs of strength. Interesting, isn't it? Though defensive sectors, some of them didn't do well, though it was a very neutral day overall in terms of bucket analysis, QFinder analysis. But we see some industries gained strength heavily, airlines. So we could look to buy some stocks, and I looked at several stocks. HA, Hawaiian Airlines, was one of them. When I shared it at midday, it was up by 2.4%. Undervalued stock with high earnings growth and high revenue growth. So it was a crown jewel, very strong fundamentals. with a short squeeze potential, and 83% of industry peers were strong. The scorecard, the rotation scorecard showed relatively it was very strong and accelerating, and this percentage is showing in itself the industry was very strong. And you can see the sharp acceleration in both quarterly earnings growth and quarterly revenue growth, year on year growths. So the fundamentals were very strong in HA, Hawaiian Airlines. Then finally, I looked at the chart. Okay, I shared the technicals also. Let's look at that. Weekly displayed a bullish headwind after this sharp drop, and it created a watermark level that was holding. The bullish headwind came near that level. The headwind signal is a unique signal that tries to capture the very bottom or very top. That was previous week when the bullish headwind came. It closed with a bullish shape, and as of yesterday, the current week's candle was bullish in shape. In the daily also, it displayed the bullish headwind right at the very bottom. It practically didn't go down below that, but it did move up, down, up, down. That's why sometimes you may notice when the bullish headwind comes, short put verticals work very well. Short put verticals would have made money even if it moved sideways. That would be one technique or one strategy to use when you see setups with headwinds. Bullish headwind, then the appropriate setup could be short put vertical. In any case, I didn't locate the stock at that time, or at least I didn't share it at that time. I shared it yesterday and I noticed that industry was strong, fundamentals were very strong. The candle shape was bullish, however, there was a trendline resistance. We would not like to buy when price is just below trendline resistance, and it is also inside a range. We would like to buy with a breakout now. Remember how it is looking like, how it will look like if it breaks out. It will look like exactly how the Topix index is looking like today. So we'll have to see if it can break out. We'll have to wait for that if we are using the Q guideline, and we could buy at the lower edge of the sideways range. That would be at this point. Again, Topix gave such a setup, Nifty gave such a setup. That would be at this point using the bull release signal, when it also created a false downside breakout. The more we study these charts, irrespective of whichever country, whichever market they are, the more proficient we become to capture the stock at the right moment. And if the timing is not right, we wait. We would have bought it at the right moment here at lower edge of the sideways range. If we didn't, now we'll wait for a proper breakout. That is what I shared, and how it closed yesterday. It did not break out. We'll see if it can break out today. If it breaks out, you may look to buy using intraday fine-tune chart. I mentioned that I shared a bearish trade idea. That was this. I shared it yesterday, 10:30 a.m. This was in the morning session. That was a bearish idea on UAA, consumer discretionary stock, and we saw consumer discretionary as a sector was weak. Let's look at it. From Sonar, I found out that UAA had a bearish breakout and a bearish go with flow trend following short setup. The industry was very weak. It weakened rapidly, was showing deceleration as well. when I shared it, it was down by 3% overvalued stock, and 100% of peer stocks were down in the apparel, accessories, luxury goods industry. This was very weak industry. Not only relative strength was weak, but in itself the industry was very weak. So that allowed us to short, and I looked at the chart. This was in the morning session, broke below trend line support. That was a breakout setup. That's what was flagged in Q sonar, and it also had bearish flow. So it was a go with flow short setup with lower high trend following short as well as breakout short, and the weekly backdrop color was bearish. So it was giving many bearish signals. That was at 10:30. If you observe the breakout using sonar in real time, you could try to enter the trade using fine-tuned chart, which would be somewhere here probably. Let's look at it now using Q Elite, how it closed. It came down further. If we look at the momentum signals, PSAR is already bearish. The PSAR reversal happened some time ago. Yesterday, it had a bearish pocket pivot, bearish Mobo breakout, bearish Kahuna. Bongo turned red. It was yellow 1 day ago. In terms of Q signals, we already saw bearish flow, also shown here. It was at pendulum or price extreme high, and it reversed from pendulum or price extreme high. That is also a sweet point to short a stock. Backdrop was bearish. So it confirmed the bearish trade. However, you could enter the trade using, first of all, you could identify it using Q radar as a breakout candidate. Let's look at the daily chart first. This is the point where the trend line was broken, the trend line support. So let's draw a trend line support at that place right here, and we could identify it using sonar as a breakout and switch to the intraday 5-minute chart in the morning session. Changing to 5-minute chart. After the market open, the early range high, early range low formed. Then it came down, came below early range low, and right at this point it went below the daily trend line support. So this is where we would short it, putting stop just above recent high. If we wanted, we could book partial profit when the risk distance was covered, and one way to trade such instruments using this breakout of daily trend line but using intraday fine-tune chart is to initially trade it using stocks, and once the risk distance is covered, you could close the stock position and use part of the profit to buy put verticals or put options or short call verticals. That way you would, within a couple of hours, you would guarantee a risk-free trade. Why would that be not a very bad idea? Because overall market is bullish. Though the sector was very weak, industry was very weak, the stock was relatively very weak yesterday, the market is still bullish. So it would not be a good, it not would not be a bad idea to quickly book profit and try to make the short trades risk free as quickly as possible. Or you could probably book partial profit and hold on to partial position. I did take a short position on UAA yesterday, and I am holding that position. Now I mentioned market is very bullish there is not much sign of weakness other than a sign of pause over Monday, Tuesday. But there are many stocks that are strong fundamentally and giving probably nice looking buy setups. And let's look at some of them. Let's look at two of them. Starting with fundamentals, let's start with Xylid. Play. Retrieve the ticker first. Xylid. Great fundamentals. Undervalued stock, high earnings growth, respectable revenue growth. 59% of peers went up yesterday. Biotech. Biotech was underperforming. But if we see the industry rotation yesterday, it was weak earlier and now it has become very strong, relatively speaking. So the industry is allowing us to buy very clearly. And Xylid's fundamentals are very strong. Last step would be to look at its technicals. It in fact gave a go with flow trend following long setup yesterday. Weekly backdrop bullish, shape bullish, daily made a higher high, broke out of this range, pulled back, and then went up again with higher low, and just yesterday bullish flow. So that confirmed the go with flow long setup. We could identify it from the sonar again. If I drop Xylid in the Q Elite sonar on TradeStation, or you could do it on Finder also, it gave a go with flow long setup, also gave a MOBO breakout. So there are nice buying opportunities. 360. I think Xylid is looking good. Though it is somewhat close to the upper boundary, this is a case where the stock was moving sideways inside a box. When a stock breaks out of sideways range or comes up from a previous downtrend, then the go with flow setup, even if it is close to the upper boundary, we can take it. That is true in case of Xylid. So Xylid is giving a proper go with flow trend following long setup. Interestingly, if you look back, the very bottom of the stock was caught by the two bullish headwinds in the weekly chart. So you could try to catch it, especially at the point it tried to create a false downside breakout, created a double bottom, went up from weekly, could switch to daily and buy it, and now it is giving also a trend following go with flow long setup. I wanted to mention one more stock. Let's start with fundamentals again. WBA. Walgreens, Walgreens Boots, undervalued stock with great earnings growth. Slight negative revenue growth, therefore it's a 3-star buying candidate. Robust earnings quality. Drug retailer. Earnings growth went up sharply. The industry's 67 peer stocks went up yesterday, and if I look at the industry rotation, very strong, isn't it? It was very weak earlier, now very strong. Yesterday it was the second strongest industry. We have total 147 industries. So very strong industry, strong fundamental stock. And now if we look at the technicals using Q charts, many bullish signals, isn't it? It was in a clear downtrend in this area. Then it turned around, broke the downtrend here, pulled back, moved inside a narrow squeeze range. And you see the squeeze is visible from the Q squeeze, though the traditional squeeze is not there. That's why it's useful to look at both the Q squeeze and the traditional squeeze. So it broke out of the squeeze yesterday. Very strong breakout, broke out of this watermark level also with bullish pressure. And if we see the momentum signals, biggest up move in 3 months, PSAR reversal, pocket pivot, MOBO breakout, Kahuna, extreme high volume. So this is showing many bullish momentum signals and a breakout from watermark level, breakout from Q volatility squeeze. That may be a buying opportunity. Very strong fundamental stock, and this is the first day you could buy it after this downtrend. Stop would be little bit far, but it looks like very strong. I mentioned earlier, when you see a stock going up by the biggest move up of 3 months, biggest move of 3 months after a downtrend, so that is the first powerful move after the downtrend. Those are usually not signs of exhaustion. Those may be the beginning of an up move. It may pull back little bit, but it's less likely that it will break below the trend line support. It may happen, but it's less likely. So like we see in Gillette, like we see in WBA, there are fundamentally strong stocks in industries that are rotating in favor. They are at a technical buy point right now as of yesterday's close, and stocks like Hawaiian Airlines are getting ready. See that similarity between WBA and HA. Both came down sharply. WBA has already broken out, and for HA, Hawaiian Airlines, we are waiting for the breakout to happen. The same pattern keeps on playing over and over. If it breaks out today, Hawaiian Airlines will give a setup that is similar to what WBA gave yesterday. Not exactly same, but similar. And if you wanted to look at it and say it's a cup and handle, you could probably say that as well. Broke out of the cup and handle with many momentum signals. So there are many nice buying opportunities, and there are some stocks like UAA where one may be cautious. So you are able to therefore use the industry rotation and the fundamentals of the stocks to find the weakest candidates to short and find the strongest candidates to buy. We are at 1 hour point. Let's end today's session here. I look forward to seeing you in our next session that will be during the weekend. Thank you for joining. Keep safe and trade profitably. No reason not to do so.